Hello, I'm Mark Shine, the Research Director at Australian Accounting Standards Board. Welcome back for our third research presentation. So the research subject here is decision usefulness, a re-examination of the information needs of non-profit general purpose financial report users. Team here is Professor David Gilchrist, University of Western Australia, Dr. Craig Furneaux, Associate Professor Andrew West, and Dr. Yu Zhang, all from Queensland University of Technology. Now, our presenter today is David Gilchrist. So a brief background about David. So David is a chartered accountant and an economic historian. He is currently Professor of Accounting at the University of Western Australia and is founding convener of the not-for-profit University of Western Australia Research Network. He has taught at the London School of Economics and Portsmouth University in the UK and at several Australian universities. David is also a member of the Asian Civil Society Research Network and the Australian Accounting Standards Board Academic Advisory Panel. And certainly on that academic advisory panel, David has made a significant contribution. Broadly, his work focuses on human services, sustainability, efficiency, public sector and private sector non-profit financial reporting and policy frameworks. David was made a Fellow of the Western Australian Parliament in 2021. So I welcome David, and please proceed with your presentation.
Thank you very much for that introduction, Mark, and wonderful to be here. Thank you to the Australian Accounting Standards Board for the opportunity to present on this subject, which I think is certainly an important subject, but hopefully from everyone's perspective today, there'll be some things that are of use, perhaps reinforcing some of the things we thought about financial reporting in the not-for-profit sector, and also introducing some new ideas about how that financial reporting might be better undertaken, facilitated, and so on. Before I get stuck into the presentation, though, I do want to say or pay my regards and respect to the elders past and present of the Whadjuk people of the Noongar Nation here in Western Australia and Perth, from where I'm sitting, and also to acknowledge all of those First Nations people who have husbanded the land on which all of the participants in this presentation are sitting. I look forward to comments and queries as we get through the presentation, and I would like to, I guess in the first instance, have a look at an agenda that really considers the key issues in financial reporting of not-for-profit organisations, and principally looking at private sector not-for-profit, of course. I'll go through some of the issues relating to what is being discussed up to this point in time, and also to talk about the research itself and the research outline that is important for understanding how we arrived at some of the conclusions that we arrived at. I'll have a discussion in relation to the major findings in this particular topic area, and also I've got some concluding comments which I'd like to share with people before the panel has an opportunity to be able to contribute, and then of course having questions and comments at the end of that session. Essentially then, just for those who are not involved in the private not-for-profit sector, I think there's a couple of things that are really important for getting everyone on the same page. First and foremost, we think there are about 600,000 not-for-profit organisations, both incorporated and unincorporated, in Australia. Of those, a significant subset of 56,000 or so organisations are charities, which really are the focus of the discussion today. All of the participants that participated in our research were from charitable organisations. That is, they were registered with the Australian Charities and Not-for-Profit Commission, and I guess are subjectively the most important elements in the context of this financial reporting discussion. The other thing that's really important, of course, is in relation to the accounting standards themselves and how that, I guess, impacts the not-for-profit sector, and contextualises the remarks that I want to make in a second in relation to what I call often cited key issues. Particularly, of course, we know that the Australian accounting standards are IAS based. We know that they're transaction neutral as well, and that they're applied by corporation style specific legislation. That is, the Accounting Standards Board itself doesn't mandate the use of these accounting standards, but rather different legislation, predominantly depending on how charities and not-for-profit organisations are incorporated, applies or causes the application of those standards. And of course, the Australian Charities and Not-for-Profits Commission Act and the subsequent regulations do that from the point of view of charities generally, as do associations and corporations acts established in all of the subnational jurisdictions around the country. I guess finally then, in charities, it's common to or required to undertake reporting based on the turnover by size. And so therefore, one of the things that I'll report on shortly is in relation to the constituents of the participants, the organisations who were actually reviewed, which were all large charities. For those people who understand how the ACNC regulations work, large charities, if you like, have the highest reporting requirements, or the most substantial governance and reporting requirements of the three tiers of charities, starting with small, going to medium, and then large. So what about those often cited key issues? I think the first key issue is a really important one, and that is the extent to which general purpose financial reports or special purpose financial reports are most appropriate for this sector. There's no doubt that there's a drive towards general purpose financial reports, and increasingly, I think anecdotally, charities and not-for-profit organisations are certainly reporting using general purpose financial reports. I'll talk to this a little bit more as I go through the findings in relation to this research. Suffice to say at this point that one of the positive things that came out of the research program was the fact that general purpose financial reports, I think, are largely more acceptable today than perhaps they have been in years gone by. In other words, I think positively, people who are charged with preparing and auditing these reports are much more supportive of general purpose financial report structures rather than special purpose financial report structures. And again, I'll talk to that in a minute. One of the key issues is always around cost versus benefit, as it should be more broadly in relation to accounting standards in any case. But for the not-for-profit and charitable sector, of course, there's a real issue around how the often government-funded activities are undertaken, but also how philanthropic and other funds that are raised for particular purposes are actually applied. And of course, the extent to which they're applied to administrative functions can stop or impact the amount of giving that might be provided to organisations. And so cost versus benefit in terms of what kinds of financial reports and what information is relayed is a really critical element. The other critical element, of course, is the decision usefulness perspective. So any study of accounting standards and the preparation and presentation of financial information, of course, should come from a decision usefulness perspective. And I guess this is the key issue from our work's perspective, where we've looked at the financial reporting standards, the results of those standards in terms of financial reporting, and got people's opinions in relation to how they might be improved in order to better provide decision useful information. At the end of the day, government not-for-profit nexus is also a really important issue, where financial reporting, of course, goes to acquittal, both to government funding agencies, so those agencies that might be providing resources to pursue particular ends, either in the form of capital grants or in terms of procurement, and also philanthropists and others that might be providing that, that financial capacity to be able to pursue human services or other missions that these charities and not-for-profit organisations might have. That government non-profit nexus is absolutely critical in terms of accountability. Who's accountable to whom for what is a major part of the purpose of this study. User identity is also a major issue, and this has been written on in academic circles for quite some time, and I guess, for want of a better phrase, assumed across the implementation, the preparation and the audit communities in relation to who it is we would expect to use these reports. And we've certainly got some elements of outcomes in relation to this financial reporting research agenda that I think comment on that and perhaps highlight some key deficiencies in terms of those proposed users and their capacity for understanding financial reports. Finally, how is the information provided is also an absolutely key issue. In terms of that information provision, one of the things that we've noticed, of course, is that a lot of financial reports aren't published directly, and we will report on that as we get to the findings aspect of this particular presentation. So in terms of methodology, we undertook a qualitative research method where we held 7 round tables. Each of those round tables had a particular cohort of either users, preparers, and auditors. And as you can see there, we had 4 round tables of users, all internal users, that is people that are associated with reporting charities. Preparers, we had 2 round tables, and we had 1 round table of auditors, all auditors that had in excess of 50% of their audit portfolio being not-for-profit organisations and who were recognised as being experts in the area of auditing in not-for-profit and charitable areas. We undertook the interviews or the process by having a semi-structured interview guide, and we had 30 participants, 12 of users, 13 preparers, and 5 auditors, as you can see there. Each roundtable session was undertaken using the Zoom platform, was recorded and transcripted, and there were 90 minutes of discussions in relation to the audit topics that were raised. Specifically, we started with top of mind questions, so very open questions where we looked to see what the top of mind issues were for each participant in relation to financial reporting and not-for-profit organisations. And then we progressed slowly towards closed questions and specific binary questions, yes, no type questions, when we felt we had exhausted those top of mind topics that people wanted to raise or felt comfortable with. As I go through the presentation and in relation to some of the findings, I'll indicate whether or not they were top of mind issues for people. In other words, they were unsolicited responses, or whether they were solicited responses in relation to some subsidiary questions the researchers might have had. It's not surprising probably for most people then, if we think about the research questions that we put in place. We actually had 4 research questions, each built on the key issues that we identified and which I briefly spoke to a couple of slides ago. As you can see, in terms of the overall purpose of this piece of research, we were looking to identify decision usefulness issues relating to the current situation in accounting standards and preparation and presentation of financial information for charities and not-for-profits. And we sought to understand that or distill that by introducing 4 research questions, as you can see there. So the first one, who is accountable? So who is the reporting entity? Research question 2, to whom are non-profits accountable? That is, who are the users of these financial reports? RQ3, research question 3, what information do those users need? So what is decision usefulness in their context? And then RQ4, how is the information actually provided to those users? So first and foremost, RQ1, who is accountable and who is the reporting entity? There's a few things there, and I mentioned in my prefatory remarks that I thought it was very positive that at the end of the day, there was certainly an ongoing commitment, I think, from almost all participants, or an ongoing recognition of all participants, that there is significant need for stakeholder accountability, that multiple stakeholders in relation to not-for-profits and charities are extant, and that wasn't challenged by any participants. And in fact, as I said before, I think one of the positive things was that there was a driving need in everyone's mind to settle the accounting standards and financial reporting function for these organisations and the content of those reports. What was contested greatly, though, was not so much that there was a need for accountability, but of course, and as we would all probably recognise, how that accountability took shape and who does undertake that accountability. And that I'll refine a little bit more as I get into some of the findings. One of the key issues was also identified that accountability is absolutely critical, as is financial reporting, if you like, as a minimum entry cost for the tax status and protection of that tax status from a charitable and not-for-profit organisation perspective. In other words, while everyone was relatively positive towards the need for financial reporting for these organisations, there was certainly a spectrum of if you like, from tick box governance, needing to have it in order to support the status that was allocated, right the way through to a very substantial interest in those charged with governance to make sure they acquit their responsibilities in that regard. There was also a key discussion around the government non-for-profit nexus, which I introduced in my prefatory comments, particularly in relation to who is accountable to whom and for what. And this is a really important issue, I think, in the context that not-for-profits and charities are often funded by government, or government procures services from them in order to implement government policy frameworks that might be instituted from time to time. And so there was a big question mark over whether or not those not-for-profits, or the extent to which rather those not-for-profits are accountable in relation to money and policy outcomes, and the extent to which government might be as well. The challenges that are identified or have been identified in relation to all of these discussions are fairly straightforward and probably not surprising to a lot of people that have been involved in the not-for-profit and charitable sector. Certainly, a lack of financial literacy impacts the ability of those charged with governance, particularly, so directors, committee members and so on of these organisations, to be able to acquit their responsibilities in relation to financial reporting. But also in relation to that, there was a clear indication of a lack of financial literacy in the membership, and an expectation that members and others that might be in receipt of these financial reports may not know their way around them, may not be able to interpret them effectively in order to be able to make the decisions they need to make. The other key issue that was substantive and that was fairly important in that context related to the lack of governance experience. Volunteer directors who had very little industry knowledge, so they might be very experienced people in other industries, but limited knowledge of the industry that the particular charity operates in, as well as a finding that retired volunteer directors were often not up to speed with what the latest financial reporting and other governance requirements were for their organisations, essentially because they were disconnected from the PD and other opportunities that exist often for those people that are employed in a full-time or part-time basis. The lack of administrative resource was a continuing issue that was raised in all three cohorts, where while financial resources might be provided by governments or philanthropists, there might not be sufficient in those financial resources to support the acquittal requirements and financial reporting requirements that are undertaken. There was a clear issue or a general discussion around the issue of regulatory compliance being a priority for these organisations. In other words, they did a lot of this stuff in order to be compliant with what was required, and therefore there was a chance that that tick box governance arrangement was extant in some of the organisations. In other words, they were going through the motions in order to be able to represent or to say that they've done what they have to do in order to be compliant with their regulators. And you can see a quote there from one participant that basically that person said, "We're on autopilot, to be honest, sort of rinse and repeat from last year, you know, from every previous year." So that participant was quite clear that they'd gone through the process, but not necessarily had absorbed or articulated into that process effectively to ensure that the financial reports were going to be as strong as they needed to be. In terms of RQ2 then, to whom are not-for-profits accountable, or in this case, predominantly charities, this reinforced a number of things. The discussion reinforced a number of things, particularly what we might term who the traditional users are of these financial reports. And in academic writing, as well as in industry commentary and so on, we have a list of organisations that we assume, or I think in a mature way can expect, would be users of the financial reports. And this research outcome or research process didn't dissuade us of those users. It was quite clear that all three cohorts believe organisations such as regulators like ACNC, ASIC and ATO were all users. Funders and government agencies were users, particularly from a government perspective in relation to acquittal requirements, and also that employees and members were considered to be users. All predictable, I guess, in terms of the work that's been done up to this point in time in relation to identifying those users of financial reports. However, I think the discussion also disclosed some what I might term higher order findings in relation to these users that are identified. One set of users that's not been contemplated before, I don't think, relates to the preparers themselves, who identified themselves as users of financial reports of their peer organisations within the sector or industry they operate in. In other words, they see themselves as using those financial reports in order to assess their own organisation's performance and to be able to compare and contrast that performance in terms of where they think their organisation should be heading from a financial and governance perspective. It was also interesting to note that all three cohorts identified the board or the committee, those charged with governance, as users of these financial reports. And while this varied from organisation to organisation, depending on the maturity and capacity of those people that might sit around the board table from each of those participant charities, generally speaking, it was identified that the lack of financial skills and financial literacy within these cohorts also meant that the board or those charged with governance relied on the audited financial report to give them confidence that the organisation was operating financially appropriately. Very different to the expectation that we would have of those reports as being the report of the directors of the organisation. And then, of course, government agencies and philanthropists seeking iterative information points through the year was also a major finding for us, in the sense that while the financial report as an audited document at the end of the financial year remained important to these people, it was clear that everyone is experiencing, or a lot of organisations are experiencing, a need for greater and more regular iterative financial reporting throughout the financial year, so that philanthropists and also government agencies feel more comfortable with the prospective outcome. Members were identified as users or potential users of financial reports, but there were a couple of issues that were raised in relation to that. Most significantly was in relation to changes to constitutional requirements in some Associations and Corporations Act and elsewhere, where the members were identified as really being a very weak link in the governance framework. And while organisations traditionally have or continue to have annual general meetings, in some jurisdictions this is not necessary, and the constitutional weaknesses were identified where the members weren't actually the last port of call or the backstop in relation to financial reporting and other reporting for these organisations. Finally, in relation to RQ2, to whom are non-profits accountable, we also identified a couple of further were important. Firstly, in relation to ACNC data, a number of participants identified that this data was a highly regarded source. It was important for the sector, and there was a lot of encouragement to continue to maintain that ACNC database and improve it as per the plans that the ACNC has. I think the second thing that was identified that was interesting was that there were some COVID impacts that really reinforced or confirmed those assumed users that we often list, particularly in relation to employees and creditors of organisations, where preparers reported that over the course of the COVID process, they had record numbers of employees and also creditors seeking financial information, financial reports from them in order to be able to confirm the sustainability and ongoing nature of those organisations. While employees and creditors have always featured on lists of expected users of not-for-profit financial reports, I think the COVID outcome or the COVID impact has been that this has really shown that these people do know that those reports are being prepared and are prepared to use them or seek them out when they want confidence in the organisations that they're either employed by or that they're selling goods and services to. Research question 3, what information do users need? So this was the real decision usefulness part of the discussion. And I guess there was a number of aspects that were top of mind for participants in that regard, particularly in relation to the issue of mission versus bookkeeping. And you can see there one of the participants commented that having good books doesn't mean we do a good job. And of course, that's, I'm sure everyone would have sympathy for that particular comment within the audience today. But to the extent that having good books doesn't mean that we do a good job, some respondents within those cohorts also indicated that you can't do a good job without having good books. In other words, having the financial reporting quality is important to ensure sustainability moving forward. The other things that came up that were really important from a preparer's perspective and also from a user's perspective included such things as the reporting of profits and the concern that these organisations had, or these participants had, that if you report too high a profit, then you put at risk funding from philanthropists and government agencies on the basis that those potential funders believe that the organisation has sufficient financial reserves. This was the same in relation to reporting of cash reserves. And so organisations feel that there needs to be some focus on how profit and cash reserves are narrated both in financial reports, but perhaps also more broadly by the sectors, so that those users understand the need for profit and also for cash reserves in these organisations to ensure sustainability going forward. The other element that was really important was in relation to overhead allocations, and particularly in the context of program acquittals, whether to government or to not-for-profit organisations. It was felt, for instance, that there might be a utility in the Australian Accounting Standards Board, not only thinking about how these financial reports might be prepared and presented, but also perhaps having some standard formula published, which would allow organisations to be able to allocate overheads and other types of costs, particularly marketing and fundraising costs, which are perennial issues for these organisations, but to be able to have a standard way of calculating those so that there's no, or rather there's legitimacy in financial numbers that are reported. Performance information versus financial information was also a key issue that was raised in each forum. Where people were concerned to make sure that, yes, it's important to present that financial information, but it's equally important to present information that demonstrates how well the organisation is performing against its mission. And then the final 2 points here in capitals, because I think they were really important points that were consistently raised through all cohorts and through all round tables, and that was that in relation to comparability, most people were concerned to see perhaps less choice in accounting standards for not-for-profits and charities in order to preference comparability, to make sure that everything's done the same way so that these people can compare accounts. And I guess that was particularly reinforced by preparers who see themselves, as I mentioned before, as users of their peers within their industry or sector as being appropriate financial reporting. The other element was the matching principle, and there was certainly some sympathy amongst all three cohorts, so that is users, preparers and auditors, for the idea of the reintroduction of the matching principle, particularly in relation to talking about capital reserves and the provision of capital donations to the organisation, which goes currently to the profit and loss, and then of course misrepresent the performance of the organisation. Okay, so RQ3, what information do users need? So in other words, the decision usefulness information. There's a couple of key issues that I want to raise here, although there was a lot of discussion around such things as performance information as opposed to pure financial information. But some of the key issues that were raised either through prompting, so in terms of the first dot point on this slide, the need to be able to report the difference or report differently controlled versus administered assets, while that response was solicited, in the sense that this was a question that was asked specifically in relation to those assets that might be provided to charities and not-for-profit organisations for their deployment in the context of their mission, but which those organisations were unable to sell or to realise, or in some cases even apply to different aspects of their mission. And so there was a need that was identified for controlled and administered assets to be reported on, so that those using the financial reports could understand, if you like, the net balance difference between net wealth using all of the assets and net wealth calculated using only those controlled assets that could be deployed or sold depending on the proclivities of those charged with governance. Importantly, though, on discussing this, notwithstanding a lot of people indicated they didn't feel that the notes to financial reports were necessarily read by users, the vast majority did agree that a note to the accounts in relation to controlled versus administered assets was preferable to having a delineation on the face of the balance sheet, for instance. Cash reserves and restricted funds were also part of that information requirements, and having appropriate narrative around those cash reserves in order that those philanthropists and government agencies that might be providing funding would be able to understand what that cash was for and why it was provided, so that there wasn't a chance of losing any potential income. Capital income, so capital grants and bequests, were also identified as being challenges in terms of recognition. Capital grants, as I said before, because they have the potential to distort the profit and loss report, to distort the apparent performance of these organisations, and bequests because there was a lot of disparity between preparers as to how they deal with bequests. And of course, there's a big risk with bequests in terms of notwithstanding you might be, your organisation might be mentioned in a will. At the end of the day, it's not until you actually receive the cash to the bequest that it becomes a real asset to the organisation. And I mentioned before some impacts COVID has. One of the impacts that was identified by preparers particularly related to sick leave and personal leave accruals, which aren't typically costed and valued on the balance sheet, but with COVID impacted organisations quite significantly, where they were having to use sick leave and personal leave accruals to be able to support people who were unable to come to work for COVID reasons. And so there was some agreement that there needed to perhaps be a valuation of sick leave and personal leave accruals in order to be able to manage the level of risk that was growing. And this was particularly observed where organisations are increasingly under interdict to actually accumulate sick leave and also to accumulate personal leave entitlements, which means that while there's also demographic change, the workforce is getting older, there's more likelihood that those sick leave and personal leave accruals are going to be used. And therefore there was more need to disclose and to appreciate what the values of those might be. In terms of RQ4, then the final RQ, and I've only got a couple of minutes left. How is the information provided? Well, you can see there that about 53% of these organisations provided their information via general purpose financial reports, 35% by special purpose, and 12% were unsure, which I think actually is an improvement on anecdotal polls of that nature over the last 10 years. What was interesting was that quite a lot of organisations publish summaries only and provide audit reports to those people who specifically ask for them, while some sought the AASB sanctioned administrative overhead formula and marketing cost formula to be published as well. In other words, what they wanted was a legitimate formula that they could use to then demonstrate to their users the nature of those costs. Okay, I'm speaking very quickly. I know there's a lot to cover, and hopefully we'll be able to get some of this out in the questions and comments session as well. But in terms of concluding remarks, as I mentioned in my prefatory remarks, I think it was very positive that there has been within the cohort, great positivity towards accounting standards and general purpose financial reports. And I think that's improving over time. There was a perceived need to see simplification of those reports. And indeed, a number of people observed that there's an opportunity for a long run strategy within the Australian Accounting Standards Board of trading technical correctness for simplification in the short term and building on technical correctness over time by having an education process in place to be able to drive up the capacity of these cohorts to be better informed and have more financial literacy. In other words, there was some support for the idea of simplifying the financial reports in the short term and focusing more on education rather than on perhaps the technical correctness of those financial reports standards, rather as they might be from time to time. And then just the final slide here is that we just want to indicate that this research falls in the Australian Non-Profit Accounting Standards Research Program. And you can see there other akin research such as earnings management, user identification and valuation, as well as audit in not-for-profit organisations is all part of a bigger picture, if you like. Other than that, I think I'm done and just on time, Mark.
Thank you, David, for your presentation. And yes, very interesting in terms of those comments around COVID-19 and its impact there on user needs, and also the matters that you raised around, I suppose, the tension or the trade-off between technical, financial literacy, education, and then perhaps a cycle back to the the technical answer. Right now, we've got our panel is 4 members of our panel, along with our facilitator. So I will introduce each of our panelists, and then I will come back to the facilitator, and then we will go forward with the discussion. So first panelist is the Honourable Dr. Gary Johns, who is Commissioner at the Australian Charities and Not-for-Profit Commission. So, and Gary was appointed that following a long and varied career in public service and policy advice, including as author of or editor of 9 books on public policy. He was an inaugural board member of the Volunteers Australia, a member of the Prime Minister's Business Community Partnership, and the committee to design the redress scheme for survivors of institutional child sexual abuse. Gary was a member of the House of Representatives from 1987 to 1996 and served variously as Parliamentary Secretary to the Deputy Prime Minister, Parliamentary Secretary to the Treasurer, and Special Minister of State and Assistant Minister for Industrial Relations. He also served as Associate Commissioner of the Commonwealth Productivity Commission from 2002 to 2004. Gary received the Centenary Medal in 2001 and Fulbright Professional Award in Australia and United States Alliance Studies in 2002, which was served at Georgetown University in Washington, DC. He was Senior Fellow at the Institute of Public Affairs, Senior Consultant with ACIL, Tasman, Associate Professor, Australian Catholic University, and Visiting Fellow at QUT Business School. So thank you, Gary. Our second panellist is Kat Fay. Kat is Managing Partner, Perpetual Private, and leads Perpetual's advice and social investment businesses in Western Australia. Kat is a senior philanthropic and business leader in Australia. She has more than 18 years of private, family and institutional philanthropy experience in Australia and Europe. At Perpetual, she oversees approximately $4.5 billion in community funds across Perpetual's work with philanthropists, non-profits and native title groups. Under her management, Perpetual's clients distribute more than $100 million annually through philanthropic trusts, estates and endowments. Prior to her time at Perpetual, Kat worked on community and built heritage regeneration projects across Scotland and London. Welcome, Kat. Our third panellist, Cameron Power. Cameron is the Chief Financial Officer and General Manager at Education Services Australia. Throughout an extensive career within the for-purpose sector with organisations such as Australian Red Cross and the Brotherhood of St Lawrence, he has been responsible for organisational financial sustainability, strategic planning and driving innovation. Welcome, Cameron. And our fourth panel member is Matthew Hall. So Matthew is Professor of Accounting at Monash University. His research interests relate to management accounting and performance measurement with a specific focus on measuring value in difficult to measure contexts, such as mutuals and cooperatives, non-profits and social enterprises. Matthew's work has been published in a variety of leading international journals in the accounting, management and non-profit fields, including Accounting, Organisations and Society, Management Accounting Research, Harvard Business Review, Journal of Management Studies, Non-Profit and Voluntary Sector, Quarterly and Volantis. Prior to returning to Australia in 2016, Matthew worked for 10 years at the London School of Economics and Political Science. Welcome, Matthew. And facilitating our panel discussion is David Holland. David is a board member at the Australian Accounting Standards Board. He is the National Head of Technical Accounting at More Australia. David has 30 years experience in a variety of positions, including providing technical advice and training, corporate development, and strategic planning. David is responsible for providing the More Australia and More Global network and clients with in-house technical training and technical advice on specific accounting issues. So thank you, David. And I'll hand over to you, David.
Great. Thanks very much, Mark. And thanks, David, for that session. That was a fantastic session. And it's a topic that's really close to my heart. I've got a real passion for the not-for-profit private sector. And I think that there's a lot of things that we can achieve at both the Accounting Standards Board level and also the other areas that you spoke about throughout the presentation. So I might kick off with a question to the regulator. So Dr. Johns, why do you think financial information is useful and important as a regulator of the charities sector?
Thanks, David. Look, the key for me is that it's part of the public trust equation, right? So I'm asked to support public trust and confidence in the sector so that financials give a clue to the ability of a charity to manage its affairs. So I don't see it as an end in itself or that the financials are the determinative, but it's part of that trust equation that people can trust a charity by looking at its financials. I might say, and this will come out a little bit later, at this stage, the financial material is not that useful for comparative purposes, and we all know why, but it's quite useful for knowing what a charity does. And I'd like to make some remarks a little later that I think we're on a very similar path here of trying to think about the utility of information. And I'm sure we'll talk about that in a moment.
Yeah, great. Thanks very much for that. And we might get Kat's input here as well as a user of the financial statements. So sometimes there's a perception that users don't really use financial reports, that they use other mechanisms or gut feel about who they're going to support. As a user of not-for-profit financial reports, do you consider that financial information useful?
Yeah, there's probably two components to that, David. One is, is financial information used? Yes, it is. Is it useful? That becomes a little bit grayer. And I think there's a component of that's about the preparer. And I think there's a component about that relates to the user as well. If I just wear my sort of philanthropy hat specifically, and we're talking about philanthropic foundations and trustees and philanthropists who typically are high net worth or ultra high net worth individuals. They've been really successful in business. And they've decided to use their private wealth for public good. In many instances, what they're leaning into in the first, when they're first kind of engaging in philanthropy is their comfort space, which tends to be around sort of business acumen and financial acumen. So they will absolutely use financial accounts as one of the indicators for assessment. Now, there's a comparability issue. So we're not necessarily comparing apples with apples when those particular users are undertaking that. And as we heard through the report, a healthy balance sheet and a less healthy balance sheet is not necessarily a great indicator of effectiveness with regards to the delivery of programs or results on the ground. So it's one lens. For me, I certainly see financial accounts and financial data being used as a key sort of piston in the decision-making process. But the usefulness component, and certainly seeing in the research, the usefulness component, both for the users that are internal and external, we have a little bit of work to do around helping people understand how to connect the bridge between the financial data and the broader effectiveness of organisations, and that's a critical piece. I don't think we've solved, and like Dr. Johns, I've probably got some views on how we can go about that, but I'm really interested to hear others commentary on the research that we've just heard about.
Yeah, fantastic. Thanks for that, Kat. So I might spin over to Cameron, who's a preparer. The research suggests that there's a perception that preparers see the financial report as a compliance exercise. As a preparer, do you see the financial reports useful for a not-for-profit entity?
You've used the word compliance in there, so I'll take this question from two lenses. One from protecting value, and secondly through adding value. In compliance in respect to protecting value, in the main, I think it does a pretty good job. So as a floor for quality across the sector, it really creates an equilibrium or a way to weed out undesirable organisations and kind of, as Dr. John sort of referenced, maintain the integrity of the whole system. So protecting value, I think financial reporting in the main does a pretty good job. And until, say, blockchain comes through and provides an alternate way to do things, I think the financial reporting is good. If I take it from a lens of decision usefulness at an individual entity level, then I get a bit flawed with the concept of financial reporting. And if I can zero in just on members who essentially are sort of in the central part of making decisions, so member being in the for-profit sense, a shareholder who's investing money to make a return, a member in a not-for-profit sense is investing their time to make a social benefit. Both of them are investing. But in terms of financial reporting, I think there are two core reasons in my mind why it's a bit flawed. Firstly, the financial literacy of the members are generally, on average, reasonably low. And I've been reporting to boards and members for a long time. And notwithstanding there are a number of individual exceptional members out there that are very strong, in the main, it does feel like you're reporting essentially to a black hole. The deafening silence coming back from financial reports just is a symptom for me of just lack of confidence in understanding them. And the second core issue in financial reporting for me is the material in that, or the content inside the financial reports themselves don't paint a picture very well about the mission of the organisation to even make a decision. So I've been reporting to boards for a long time, and I don't think I've seen a member or a board make a decision based on a general purpose financial statement. I just haven't seen it. So I think the consequence of that is decisions are either not made because there's no information to make a decision, which is pretty bad, or they're making decisions based on subjective information, bias, or just an emotional sort of state without the report being of any useful. So I hope that helps.
Definitely. Some fantastic insights. And there's always a trade-off. I do often hear people talking about comparability, that's a hot topic of this conversation. And sometimes the best reporting information is seen through the eyes of management, which we sort of tried to do with the operating segment standard. But when you give judgment, subjectivity, then it can be used for good or for evil, I guess. And sometimes you can actually, there's a real trade-off there. So I think that there's definite room for improvement, but where we find that balance, I think, is one of our real challenges. So I might spin over to Matthew. There's been a lot of discussion about education, communication. So being an academic, you're an expert in education and communication. What do you think may help improve communication of financial information to users? Or what do you think would help preparers to better communicate financial information to users?
Yeah, I think picking up on what you just said then about this trade-off between comparability is really hard, because I think, I just had a look at a few general purpose financial statements in preparation for today. And as sort of a donor to nonprofits, a lot of the, say, expense categories that you look at don't really tell you a lot. So they might have operating or cost of services, and it's very difficult to know what has the nonprofit spent their money on. And so one way, and a lot of larger nonprofits do this already, is they reinterpret that and give you a lot more detail on where money has been spent. But of course, that is related to their mission, and they might use different categories that can't be compared to other non-profits. But I mean, as a donor to that charity, that information is much more useful. And in particular, I mean, and a lot of research I've done has been with everyday donors. So the research didn't include those kind of users, but what we find is that, so people don't want to know how much was spent on employees. They want to know how much did the CEO get paid, or how much were the senior managers paid, and things like that. So breaking down some of the expense categories and how that's reported, I think at least your everyday user would find that really quite useful. And I think also visualization. So again, the users we speak to, no one looks up the general purpose financial report. The most they might do is look on a website and look at graphs and things like that. So I think a lot more focus on improving the use of visualizations would be really useful to help communicate information in a more sort of layperson friendly way. And then finally, maybe some emerging links with digital reporting, where you can actually, instead of it being a one-way communication where a firm just issues a report and then that's it, you can perhaps, this might be in the future, but using some trends in digital reporting where you could actually drill into some expense categories if you were personally interested in them, and there might be some more information sitting in behind that, rather than at the moment all you would tend to get is a PDF file on a website which you can't interact with in any way. So there may be just some initial ideas on how information could be communicated a bit better.
Yeah, there's some interesting thoughts there, Matthew. The drill down, what I see with a lot of not-for-profits is that they have 1 or 2 pages of all sorts of expense line items like postage or telephone or whatever else that can sometimes be less useful than if it was categorized in relevant categories, and then maybe you could then drill down if you wanted to. But you're not, I know a lot of the research talks about how if you over disclose, you actually, it's less useful because there's too much muddle for people to work their way through. So, but providing that drill down option could be quite a useful one. And there might be, I know Dr. Johns, there's a few changes coming through with the ACNC with regards to key management personnel compensation in this coming year, and then related parties in the year after. So that might give some of the comments that you just said there about what people are interested in seeing. You know, if it's such and such foundation, is 50% of the money going to the top execs before it even, you know, filters down to their programs, that sort of thing. So, so with that, Dr. Johns, what aspects of financial information do you consider to be the most important? So there's $1 million question for you. What do you look at as the regulator?
Every charity would love it to be $1 million question, I guess. Look, can I just briefly say the journey we've been on? And that is, I can't raise information from the sector willy-nilly. I have to do what I'm told according to law. Nevertheless, within that, we've been working on a project for 4 years now, which we launched in 2 days' time, the 1st of December, which will, for the first time, enable anyone, donors, come to our website and search for a charity without knowing its name. What they'll be able to search for is charity programs, who those programs are for, and where those programs are delivered. So it won't be 60,000 charities alone that you'll be searching. You can search among, well, let's say up to 100,000 programs. Now, the whole purpose of that is to help me answer the question, what does the sector do? That's what the Act asks me to do. So we've arrived at a really low cost solution. And the analogy I use is we'll get you into, you know, Coles or Woolworths, and we'll get you to the right shelf, but you have to select the jam jar. So in a sense, it's the jam jar situation that you might want to discuss, because that's when people might get down to the financials, because you'll be comparing like with like. We can't go beyond what we've done with what I'm calling a charity marketplace. So in terms of financial information, there's one more piece of useful information, that is where your money comes from. I can't ask the private sources, but I can get you to distinguish public from private. So we're encouraging the large and medium charities, at least, if they're going to put down grant $1 million, can you just say where it's from? You know, if it's the Department of Health, New South Wales, say so. It's not a compliance exercise. It's an exercise in answering very simply, who are you? And where your money comes from is part of the puzzle. And donors might use it in the sense of saying, well, you're receiving a great deal of money from the Department of Health, so I'll go and donate my money elsewhere. Or some donors will say, well, I put my money where you are because the Department of Health invests with you. You must be pretty good. And we know the literature tells us that. So we're just trying to use our existing powers and resources to gather for the donor really simple comparative information, which in our case is what programs do you run. I don't see a time where financials will be broken down by program. I think that's really complex stuff, but you know, I know you probably work towards that, but at least we'll get you towards comparable programs, and then as an addendum to try and improve the financial statements, for instance, to distinguish where your public money comes from. Thanks, David.
Yeah, no, that's very interesting. And I think that's going to be a bit of a game changer for the people to be able to, you know, very hard for them to work out which charity's doing what program. So to be able to search for that, I think is fantastic. So if I spin that over to you, Kat, that to say as a user, what do you think is the most important information in the accounts?
Yeah, well, I mean, without sort of jumping into the sort of conversation around, you know, usability and its assistance in making decisions around which organisations to choose investing in. Let's say you're down to, I've got a half a dozen organisations I want to look at. There's only a certain amount of money that I've got to give away. Let me have a look at the financial documents and start to try compare a few things here. I mean, ultimately, you know, from a hygiene perspective, you want to know that the organisation is a going concern and is solvent. And in many instances, that can be tricky, as David kind of indicated around controlled assets, etc. You know, it becomes really important to feel some confidence around that. I would say the majority of people who are using financial accounts probably lean into the auditor's report with relation to that. And in many instances, I don't think notes are particularly helpful in decision making around those components. You want to understand the reserves, but you want to understand the reserves within context. Again, you know, a really big part of the research that's come out. I know that there's a lot of kind of concern within the not-for-profit sector more generally around donors not necessarily having a really clear understanding of the reserves policies of organisations, you know, why they'll have a certain amount of money on their balance sheet, how much of it's restricted, etc. I think that's a fair comment, but I also think the documents themselves, the financial accounts themselves, aren't particularly helpful in educating around it. So when we're talking about having consistency of messaging out there, you know, using the notes and using supplementary material to help tell a story around why the health of the balance sheet needs to look a certain way becomes really important. I don't necessarily think we've got the same problem in Australia as they do in the United States around concern with fundraising ratios. That might be largely because we have government funding at the level that we have in Australia. I hear it narrated on occasion by donors around helping me understand the fundraising ratio, but it feels like it's kind of an isomorphic type question. Other people ask that, so I guess I should ask it: how much money is getting to the child on the ground? But I think the not-for-profit sector has become much better at telling that story around effectiveness rather than pure efficiency, which is really important. And then I think from, you know, we assess around about 1,500 applications every year at Perpetual that we then decide whether or not to put those submissions in front of philanthropic clients. We do spend a little bit of time thinking about diversification of the revenue streams. So that particular commentary around tell us where your grant making money is coming from, tell us whether it's government or whether it's private, is actually very, very important, because we need to understand, particularly where there is government funding core to an organisation's activities, there is increasing risk to that organisation around change in policy. So the same way when you're making a personal investment for profit, you're looking at some of the risks in the environment. Changing government policy is a risk in the environment for not-for-profit organisations who are reliant on those government funds. So diversification of revenue is one of the key health indicators that I think you're looking at when you're operating your philanthropy at a higher level than just sort of your regular giving kind of component. So there's some of the things. But again, I'd come back to, just the messaging around, it's great to see the number on the page, but some of the notes could be really helpful around helping potential grant makers understand the nuance of what's actually in those statements.
Yeah, and I think it is interesting, that effectiveness versus efficiency argument, isn't it? Because I could take your money and not even think about it and give 100% to people, but did I give it to the right people? Did I really help them? Would I be better off only giving 80% and, using the other 20% to make that, more effective? So.
Absolutely, David. And that comes back to then, how useful is some information around salaries or otherwise without the supplementary material around the effectiveness of programs.
That's what you're doing, yeah.
And, we know we operate in a complex space, right? So, we're dealing with some of our community's most wicked problems.
Yep.
Wouldn't it be great if it was cheap and efficient to deliver to solve many of those? It's not. And I think the users need assistance in understanding decision making as it relates to that sort of efficiency and effectiveness nexus.
Yeah, and we've got about 5 minutes left. I'm getting the wind up already, and I'm only halfway through my panel questions, so maybe I'm failing as my first role as facilitator. But while I do ask a couple more panel questions, don't forget the Q&A chat box. So they're in the Q&A. There's a couple of questions, but feel free to put them in advance. So I'll ask you, Cameron, along the same lines, what do you think is most useful? But what we haven't asked is what's least useful in that financial reporting. So what could we get rid of? That's a bit of a waste of time, in your opinion, in that financial report.
Well, I might speed up my answer, David, and just focus on the least useful for you. Technically correct standards are probably the most least useful part. So things like lease accounting, revenue accounting, or financial instruments, in a lot of contexts, they add a lot of complexity for quite little return. So when you end up with a set of financial statements that might be the front couple of pages say things like, these financial statements need to be read in conjunction with notes from pages 5 to 45, you start to see people's eyes just glaze over with the sheer size of the notes they've got to comprehend. So the technical standards that drive the size, for example, the financial instruments one, which might be, you spend a lot of time trying to explain people, we've made a decision to put it through OCI, and then with the recognition of debt and equity instruments, it's realized gains here and unrealized gains over there. And I know I've just lost them back at what is OCI, and I just can't bring them along the journey fast enough to get them to comprehend the nuances of a standard. So I think just the struggle with the size and some of the technically correct and bulletproof, but practically useless standards are really getting in the way, and then just pulling apart that gap between the inherent financial literacy of members and stakeholders are what they are, and we can improve that, but it is inherently lower. That's okay. But the solution can't be to have a highly complex standard that just exacerbates the gap. So I think the standards are set up here and the knowledge is set down here. So I think that difference of that gap expectation of technically correct and being practical sort of drawn a bit too far.
Yeah, I think that's interesting when you overlay that with what Kat said, that the first thing you look at is, are they, like a going concern? You're not going to invest in somebody you think's not a going concern. Well, if we bring that back to the government grant scenario where you might have a 5-year grant, if you have to recognise all the revenue in year 1 and then you recognise all the expenses for the next 5 years, which might be the technically correct answer, when Kat comes along and looks at your accounts in year 2, 3 or 4, you're making huge losses and you're up against it trying to explain, well, that's because I recognised all the revenue back then and I'm going to get more revenue, etc. So that complexity can actually be quite hard to judge. So I'll ask my last question to Matt. One thing that I always look at is this special purpose, general purpose, because it just gives, it ties people in knots. And I did note that David said that the numbers have improved, which I think they have, but there's still 12% of people who don't actually know what they're preparing, which is pretty shocking. And the other figure I'd throw in there is that 35% are doing special purpose. And a lot of our discussion today is talking about comparability. That special purpose throws comparability out the window. So if you add 12 to 35, you've got nearly 50% of people reporting who arguably are never going to be comparable. But that was a bit more of a policy statement on my to you, Matt. But so what are some factors do you think contributing to this lack of understanding about what's special purpose, what's general purpose, what I'm actually doing if I'm doing special purpose?
Yeah, I think we've got to be a little bit careful though we don't overinterpret the research, because they only asked 8 people, so that 12% is one person out of 8. So I think we've got to be a little bit careful about not extrapolating that to all of the non-profit sector. But I think, I don't know, but maybe it goes back to, I think all these reports, whether they're general purpose, special purpose, are often about trying to raise money, applying for grants from trustees, putting out information to get money from the general public or wherever it might be. And so perhaps there's just not a lot of interest in whether it classifies as a special purpose or a general purpose. The whole point is to prepare that information as a way to raise money. And I think that's where it's a little bit different to say the role of general purpose financial reports in the capital market, where, they're, unless it's a new share offering or something, the reports are really being sent to investors to decide what to do with their shares, whereas non-profits are continually having to raise money, sort of all the time. And I think all this financial information is being used primarily for that reason, apart from acquittals and things, which are obviously very important. But I think that, this information has a much different role, I think. And I think that's maybe why when people sit there think, are you doing this or that? It's like, well, I'm trying to raise money. What I call the report doesn't actually, doesn't really matter that much.
It's actually an interesting thought, isn't it? That, say for a listed company, you do an IPO document, you raise a big chunk of equity, and then you run your business, and that's how you make money. Whereas, as you say, with a charity, your business intuitively doesn't actually make money. So therefore, that's not necessarily your funding source. Your funding source is ongoing government or other sorts of information. Yeah, I think that's a very interesting point to finish off our panel discussion. So we'll kick into the Q&A. We've got about 20 minutes based on my time, and great. Thanks, David, for coming back in, because there might be some relevant questions. Now, you might get a bit confused because there's 2 Davids, and it always does create confusion. So I think you were going by Gilly, weren't you? And I was going by Dutchy. So there you go. We can make the Q&A a bit more casual. It's getting towards the end of the day, isn't it? We haven't started drinking yet. I think that's in about an hour. So the first question came from Freddie, and it said, if the NFP board's management committees would be considered as primary users of general purpose financial statements because of their lack of financial knowledge, does that impact their ability to discharge their governance accountability? So I'm tossing up between whether this is a Dr. John's question or a Gilly question. Maybe it's a bit of both. So
it's definitely a Gilly question.
Fantastic. Look, I absolutely, I think it does. So I think there's 2 things about that finding that are important. One is that there's a clear indication of what might be regarded as some suspicions many of us have had in that regard. Secondly, then it's an education process and understanding the extent to which declarations made by boards might have foundation in terms of their lack of understanding of the financial reports and other sustainability and solvency issues they might be declaring in relation to. So there's certainly an issue there, as our common expectation, of course, is that directors develop or cause these reports to be developed, and they are the directors' reports, not the executives' reports. And I think that's an important consideration.
Do you have anything to add, Dr. Johns, or you?
Look, I can't think of a compliance case where we've gone to a charity in trouble and said, you are not sufficiently literate in reading, the report. It's more that something has gone wrong because someone has told us, usually from the inside, and then we get to troll through the financials. So the literacy, if you like, if that's the right term, among charitable persons, responsible persons, is important, but it doesn't necessarily come to the front when we undertake our compliance work.
I think it's also interesting when you overlay some of the AASB board guidance. So they talk about when an auditor can be involved in preparing the financial statements and that self-review threat, and saying that management need to be able to take responsibility for those decision-making, important decision-making as part of that. So I was very interested in that part in the paper, talking about the way they viewed that, because that almost shoots in, knocks out the ability of the auditor to be involved in the financial statements whatsoever if the directors are making those sort of statements. But how widespread that is, I guess, is also a question.
Actually, could I just make a quick comment on that? Because I think, two things. One, philanthropy has a really important role in investing in the capacity of the sector. We're highly reliant on volunteer board members putting their hands up and acting as, governors of really complex areas within our social sector. And we don't necessarily see that they've got the appropriate investment in their own development, sitting behind them as you would in a for-profit organisation. So I know Gilly's obviously involved with the Australian Scholarships Foundation. Perpetual's done a lot of investing with Australian Scholarships Foundation as well, to ensure that there is a space for directors to go to increase their own knowledge and capability in this space. And I think a lot of directors who put up their hand to sit on boards do it because they are passionate about community and they are passionate about issues. And they don't necessarily have a really clear understanding of the governance requirements that suddenly are sitting on their shoulder, and they are as significant as the for-purpose sector. And the ACNC, we are very lucky, is a great regulator to work with, but it has teeth as well. So we need to make sure that we're supporting directors in the right way. And philanthropy, I think, has a really important space to occupy, because yes, I think it does absolutely impact their ability to discharge what we expect is the duties of directors in many instances.
Yeah, no, very good points. We've got a second question from another David. So I'm trying to think of a nickname for David Hardage, and I'm thinking Hardo. We just put an O on the end or whatever, or Davo or whatever. I don't know what you want to go by, David, but do panelists think that the broader topic of the AASB service performance reporting project would be relevant to NFPs? And if so, what do you mean by service performance reporting outcomes, or just activities and good intentions? What I've seen, my personal view, is that I do not think the public sector NFP service performance reporting is at a level equivalent proposed for smaller private sector entities. So I guess calling for volunteers from the panel who wants to have a crack at that one first. Take us, Gilly.
Yeah, I'm happy to have a go, Dutchy, and thanks for that, Davo. This is really starting to sound like an Australian session, isn't it? Look, I think there is a need for that kind of reporting. That was clear in our research, but also in other research we've conducted and getting around the sector as well. That's really important. I think there's a couple of issues though that extend the discussion and which I'd like to raise. The first one is, of course, that a lot of human service organisations might want to report on their mission activities and report on their outcomes, and all of that is absolutely appropriate. And I think the Davo's question had inherent in it a need for us not to just simply report stats in terms of outcomes, but what are we actually achieving, which is important. But there's two mitigations or two challenges there. The first one is that a lot of human services activities are unable to be reported on in a 12-month framework, such as we're used to reporting around financial reports. And so I'm thinking in the areas that I work a lot in, disability services, child protection and so on, the horizons can be very long. And I know Kat and others have that experience and understand that. I think that's an important consideration, but a more telling consideration is that I don't believe, and other research that we've undertaken over the last 5 years has reinforced this, that government departments don't actually invest sufficiently in their own people to be able to support those funded not-for-profit and charitable organisations to be able to then contract and undertake the process to have service outcomes reporting. And I think that's a really important issue, because a primary audience, whichever way you cut it, for government-funded organisations are those government agencies. And essentially, my experience and certainly our research tells us that the fallback position of those agencies is simply to the financial reports, because they don't have the skills and capacity to be able to judge outcomes, performance measurement and so on. And so they're the two comments that I was keen to make there.
Okay, great, thanks. And I think you've got your hand up, Dr. Johns.
Yeah, thank you. Look, I'll give you a little example. We investigated 3 big charities involved in bushfire relief at the beginning of 2020. And the question that, typically the journos would ask me, or go onto television or in the Daily Telegraph or whatever, and say, how quickly was the money distributed? And then that's a really dangerous question, because if you go to Red Cross, they'll say, if we gave away all of the money in the first couple of months, which would be a measure of, performance, they would have nothing left for those people who are in equal need, but didn't knock on the doors of Red Cross till 6 months after. And these are people who try to just eke it out themselves with friends and family, and then literally fell over and came to Red Cross 6 months later and needed their help. So that became a very big piece of explaining from a really experienced operator, Red Cross in this case, of what it takes to perform. So when we set performance criteria, it's a bit like David Gilchrist is saying, you've really got to know the business that you're in before you can begin to have fair measures. And if you don't, you can be really subject to, if you like, crude criticism. Why didn't the money all go out the door in the first day? Blah. Anyway, that's just a little illustration.
I think that's interesting. Matt, did you have your hand up?
Yeah, I think related to sort of both topics about, financial reporting and the service performance reporting is sort of understanding about this investment in capacity, because again, with our research with everyday users, there's a real lack of understanding of, say the infrastructure that the Red Cross would have to set up to make sure that it actually can distribute that money effectively. So I think there's a sort of sitting behind all of this is a real need for funders or whoever to give money to actually fund reporting, because especially smaller charities, they just don't have any money. So it's not surprising that there's not a lot of investment in providing good reports and so on. So I think it's a real catch-22. Like, people want better information, but often there's no one's willing to pay for it, including me. I mean, when I think of giving money, I don't think, oh, this can go to producing some really good financial statements. I want it to go somewhere to help someone. But that I think we need to sort of challenge our thinking around what is a good use of money, and maybe reporting is part of that bigger like capacity building piece that is actually really important for operating well.
You can overlay that, for instance, the discussion earlier, I think it might have been in Gilly's paper, where about COVID-19, triggered a use of sick leave and other things, that sometimes some of these grants, you can't put aside 10% for redundancies or sick leave or whatever else. So you're always robbing Peter to pay Paul in meeting some of these other obligations that maybe don't come explicitly from a grant. I might throw to you, Kat, for a question that, without notice, around the sense of, with performance reporting, we keep harping back to comparability. And a lot of times when I see performance reporting or management reporting, etc., it's very hard to draw the line between dictating what people do in that reporting and giving them a free rein about what they report. So then, if we do maybe get a little bit more service performance reporting, if everyone does it in a different way, how useful is that going to be for you as a user to be able to, look at different programs?
Yeah, I mean, it's a really good question. One of the things that we don't know right now is what are the unintended consequences around some of that comparability aspect. But I think, Matt and Dr. Johns have kind of hit on it to an extent. There's a whole sort of list that we are all probably really familiar with, not-for-profit organisations being asked around their effectiveness, which are actually efficiency questions. And they're questions that, the general public has heard and, thinks that getting money out the door really quickly in an emergency situation is the best possible use of funding, without necessarily understanding the longer term ramifications of building back communities and building back resilience in those communities, which, there's tons of literature that tells us about, that being the most effective way to consider distributing out in those particular instances. And it goes on, over the overhead myth and administration costs, fundraising ratios, all of these types of things. And what we need to remember is that, at the core of all of this, decision makers trying to get it right. They're trying to help community as effectively as they possibly can. That's ultimately what they're trying to do. They don't want to see money wasted, but they don't necessarily have an understanding of the things that they need to have an understanding within that complex system that they're operating in. So I think whether it's a common language or comparability or consistency of what we're talking about in the market, those could be the most important things that we do to ensure that we're all on the same page, and that we see less of 0% spent on admin kind of in the marketplace as a fundraising approach being said. So those for me are really important. And one thing I will say about the philanthropic sector right now, there's two projects that are taking place. One is called Pay What It Takes. There's a Pay What It Takes coalition that has been set up across sort of organised philanthropy in this country, which is basically saying, stop hiding your admin costs, right? Start just telling us what it costs to run this program and do it really well. So we can start talking to our trustees and we can start talking to the broader sector around doing that really, really effectively. Sort of associated with that is another program which is saying we're going to just give a baseline of 30% admin costs within all philanthropic grants that we're going to do, because we don't have trust for the not-for-profit sector doing it anymore. So 30%, lots of literature says that's usually around about the market. Still could be short in a lot of instances, but a lot of grant makers now are just adding 30% on to their grants to cover off on some of the things that we've talked about today, which could include financial reports and could include better acquittals and could include better reporting just more generally. So philanthropy is ready, we're ripe. I think there's something to learn for the broader sort of donor sector there as well.
Yeah. I'll throw to Cameron before I make a comment on that.
And so bringing it back to that original question about service level reporting, probably, if you look at impact reporting on a regular cadence of a 12-month reporting cycle. Impact reporting is probably way out there. It's going to be too long term to be able to report accurately. But in the absence of having something tangible to report on, you do get that pressure of the overhead myth or the need to spend it fast, because otherwise it's sitting on the balance sheet and therefore you're not effective. So I think you need to, organisations and charities need to hook onto something more of akin to an output measure. And implied in the sort of the question itself, it would be nice if the organisations put a stake in the ground and say, this is what we're going to do next year, that's really thought through about the best use of those resources, and then report on what they were at year's end. So you've gone and declared something, but you've gone back to 12-month window in a outcome framework that's representative of impact, but not impact, because again, that's just too far out there. That articulates what is the best thing that could be done with those resources, and be brave to say, if it costs 30%, if it costs 50%, but we've told you we're going to do this, and this is what we think is important, and the transparency, we should be able to hold up to the storm if you're just clear about what's important, and then following through to deliver on what you've said to deliver.
Thanks, Cameron. Gilly?
I just wanted to add a couple of points. I mean, one of the problems with only being allocated 30 minutes to talk about your research, aside from that academics can speak forever anyway, is that there are a number of other elements that are just, I chose not to report on for the presentation. But for instance, one of the things that a lot of people said was that general purpose financial reports are good as an entree port or a triage opportunity for philanthropists and others. In other words, they have, because one of the subsidiary discussions we had, of course, was, well, are philanthropists truly users of general purpose financial reports? Because if they're wandering around with their checkbook, to put it bluntly, surely they can ask for any information, in terms of the definition of user. And almost universally, this kind of questioning was responded to by saying, well, we have to have general purpose financial reports audited, because that's our entry point, if you like, where people can say, yeah, we are governed to the point where it's worth an organisation taking some time to look at us further, as opposed to saying this is the start and the finish of the whole thing, if that makes sense. So there's more to it than that. I think the second issue I wanted to raise was to Kat, and I think Matthew and others have talked about the mythology surrounding the sector, and I think this is a really big issue in a lot of ways. For instance, I was talking to a very senior accountant in an accounting professional body. We're lucky we've got 3 in Australia, so I don't have to say which one, that still considered not-for-profits, a charity shouldn't make profit. That's why they're not for profit. So I think there's a lot of mythology that we've got to try and rectify as well to start this discussion off, because who would be happy having a charity that didn't spend any money on audit or administration? Who'd be happy with any organisation not doing those things? It just wouldn't happen. And then the third element that I think is really important is that trust issue. Again, I think Kat raised it, but I do think there's some work to do on trust, because that mythology sets up charities and not-for-profits to look untrustworthy, because if I don't believe you should make a profit and you're making a profit, if I don't believe you should have any money left and you've got money left, all of those things feed into this sort of cycle, if you like. So I just wanted to make those couple of comments.
Yeah, I think they're all really valid comments. In the when you were having the discussion about good books, or you don't have to be good to have good books, or I forget analogy, that one of the ways some people cut costs is not to have qualified accounting type people in an organisation, isn't it? So, but then at what cost does that then give your organisation for the reporting and other sorts of implications that you encounter?
It's a really important issue, David, and I think one of the things that we're noticing is that the gap between CFO remuneration and accounting remuneration in the charitable and not-for-profit sector as compared to commerce or government has started to open up they've never been at parity, as you know, but there's always been an acceptable gap. And I think what I'm hearing anecdotally is that gap's widening quite substantially. So that has an impact as well, of course. If we're not paying people, at some point people have to make a job quality decision because they've got kids, mortgages and all the rest of it as like everybody else.
Yep, good point. Okay, I think we've only got a couple of minutes left, but I might throw to Cameron there. So part of this discussion that we've had here and also in the paper, I think there was a number thrown around of 80 to 100,000 from one of your participants, Gilly, about the cost to prepare some of this stuff. So based on your experience, Cameron, do you have any comments or suggestions on how we could reduce preparation costs for not-for-profit entities?
If you look at some of the costs or general buckets of costs, you've got the finance team that are there for the whole year doing the reconciliations, the monthly reporting. So there's a core, it's not just the year-end reporting, that team drives the reconciliations for the whole year. You've got the audit team that will come in and audit, that broadly is what it is. You've got costs of publication and making the report look good as a presentable, marketable document, and that's really a choice of how far the organisation wants to go and put its story into the annual report. And you've also got another sort of cost, which is the volume of acquittals. So at larger organisations, you might have one general purpose financial report, but you might have 40 separate acquittals for the different programs that you run. And those cumulatively add up at $5,000 to $10,000 each, just on the auditor side. So there's a big industry in this acquittal space that adds a lot of cost. I'm just kind of there the generic cost buckets. Suggestions to reduce that, probably got three. Firstly, to reduce the complexity in the standards. It's a reasonably straightforward, but if we could reduce the level of complexity or different ways of doing the standard to keep it a bit more simple, then you reduce the cost. So that's broadly in the space of the AASB to help lead. Within the organisations themselves, can do a lot for themselves to keep the accounting as simple as possible. So I've seen a lot of organisations, especially over time, create a lot of granular level accounts down to postage stamp level and just doing these micro accounting because somebody at some point asked a question. So I think organisations need to be a bit ruthless with themselves about what is the key decisions we need to make on this information and not get sucked into too much detail that'll build up over time. So keeping things lean within the organisation is probably essential. And thirdly, that looking at that acquittal space of how to attack that problem of having the funders being able to articulate how much accounting overhead is required for each small little funding parcel. So trying to get a different mindset in funders, just not to be demanding on so much information for so little. So 3 suggestions.
Yeah, no, I think the acquittal one, obviously the AASB, I'm not ducking and weaving away from that one, Cameron, but the acquittal space is also one where you're saying, well, if I'm producing a good set of general purpose accounts, how much of the acquittal can be done via that versus individual projects. So I might throw to Gilly for last comment, and then I'll bring Mark back in to wind up the session for us.
Thank you very much. I need to build on Cameron's comments and to say, right at the start, I think I mentioned that I thought it was quite positive, the reaction to general purpose financial reports. And I thought that, in my view, over the longer term, it's a nuance that's really quite encouraging. The other thing that was encouraging was in relation to costs. People weren't worried about cost per se. They were worried about quality reporting and cost. In other words, that they were getting value for money from the investment, as opposed to saying we simply shouldn't have the investment. And again, I thought that was quite a positive nuance on the normal, on my experience of the normal discussion relating to costs over the last 20 years or whatever it's been.
Yeah, no, good comment. All right, I might bring Mark back in. I think we're just about at time or thereabouts.
Thanks, David. And thank you to David Gilchrist for and his team for their for the research, for their presentation, and for the lively discussion from the panelists, and also the questions that came from the audience. And I think we could see in this discussion that there were some issues which were actually similar to what we heard in the discussion of the previous project, which was looking at other comprehensive income and the non-professionals investor understanding or use of that understanding of information when that term was used. But we've heard here some interesting discussion, particularly around performance reporting, so, and impact reporting, which I'm sure the AASB will consider closely. So thank you. So we now go for a break, and we have coming back at 4 p.m. Anne Tarker. So I believe Anne is in London, so we've woken her early so that she could be our second keynote speaker for today. So if you can join me just before 4 p.m. at Australian Eastern Daylight Time, that would be fantastic. Thank you.
Thanks, Mark. Thank you, everyone.
Thanks, everybody.